Hello there, I'm Amira David. This is Boom Bust, and these are the stories we are tracking for you today. Well, China says it's shedding 2 million coal and steel jobs as the commodities rout continues. Plus, the ongoing FIFA corruption investigation has turned its attention to a major U.S. bank. I've got the details on all of that coming right up. Then Carl Denninger is on the show. Given Apple's weak sales, some have said this is the beginning of the end for the company's rise. Harsh words, but is it the truth? He'll weigh in. Then in today's big deal, Ed Harrison and I are talking about the global markets. Gold is up, but is that really where you want to be, investing in a deflationary environment? We've got that and a whole lot more coming up for you on today's show. Don't go anywhere. Boom Bust starts right now. $1.8 million. That's how many jobs China says it will eliminate in the coal and steel industries in an effort to reduce industrial overcapacity. Analysts say this is yet another outgrowth of an economy that's now posting its weakest growth in 25 years. In the last year, China's slowdown has fiercely exacerbated a global rout in commodities. For years, China grew its economy by building infrastructure, by building factories that helped boost the demand for coal and steel. But as China now transitions to a consumption-based economic model, those industries it was once built upon are now suffering. And it seems the commodity-related layoffs are now hitting China itself. This comes as China steps up efforts to pad the slowdown by cutting the amount of cash that lenders must lock away. The required reserve ratio will now drop to 0.5%, effective on Tuesday of this week. Chinese shares, not surprisingly, are reacting to the volatility. Stocks closed at their lowest levels in a month on Monday, with the Shanghai Composite Index down 2.9%. German Chancellor Angela Merkel recently warned European countries that sealing the borders to refugees would lead to, quote, chaos in Greece, a nation that's become a major point of transfer for them. Shortly after she made that assertion, a chaotic scene erupted on the Greek-Macedonian border. Boom Bust Bianca Vicini is in New York with the details.
It was just last week that Austria teamed up with a group of Balkan nations to tighten up border controls amid the refugee crisis. That meeting, which Greece was intentionally left out of, quickly made headlines for leading Athens to recall its ambassador to Vienna. It did create tension between two EU nations, but it's also resulted in a mess at Greece's border with Macedonia. On Monday, crowds of refugees used a pole to push through the gate at the border, leading authorities to respond with tear gas and rubber bullets. The incident occurred at a camp in the Greek village of Idomeni, which sits right on the border and remains a crucial part of the Balkan route to Western Europe. By Sunday evening, an estimated 7,000 refugees were stranded by the camp, which only has room for 3,000. And that's just in Idomeni. In the rest of the country, at least 22,000 refugees were locked in with nowhere to go. And Greece's finance minister warned that figure could reach 70,000 in just a few days. In 1 week, EU leaders are scheduled to meet with Turkey to come up with a better way to reduce the high refugee influx, especially as the weather gets warmer. German Chancellor Angela Merkel told ARD that they'll determine how to restore the Schengen system step by step with Greece. But judging by how quickly things moved in the past 7 days, the EU could be in an entirely different situation by next Monday. Reporting in New York, Bianca Vicini, RT.
National security should supersede privacy concerns. That's what Warren Buffett told CNBC on Monday, just the latest voice to weigh in on Apple's fight against a government order to help hack the iPhone of one of the San Bernardino terrorists. Buffett said in serious situations, security should trump privacy. But his comments come exactly a week after Michael Hayden, former director of the NSA and CIA, said that creating a quote-unquote backdoor could actually backfire on national security. security by allowing foreign state actors and cyber criminals to capitalize on a new vulnerability. That's exactly where I left off my conversation with Carl Denninger, former CEO of MCS Net and publisher of the Market Ticker. I first asked him whether national security is perhaps a stronger argument than privacy when it comes to fending off this government order. Here's what he had to say.
Well, that's the root of the issue, is that security, by definition, protects both good guys and bad guys. And there are far more good guys than there are bad guys. So you're not trying to help terrorists. What you're doing is trying to help everybody. The reality is that it is far more likely that a bad guy is going to try to use something like this to break into good guys' things than a good guy will use it to get information off of a dead terrorist device. So, yeah, absolutely. This is really the crux of the issue, is that if we start building this capability into devices and commanding people to use it, it is just a short matter of time before the bad guys get their hands on it, and then all of your data is gone. And when you think about what is currently on most people's phones, health information, your bank account data, all sorts of information you don't want out into the public, this becomes a huge problem because the Chinese and the Russians, they're very interested in getting their hands on this. So are just regular common criminals that would like to just rob you. So there's a game that goes on here in that you say, well, but these evil people misused this information. The problem is, as soon as there's a master key, no matter who thinks they have it, that now becomes the low-hanging fruit that everybody that would misuse it tries to steal, and they will be successful.
Mm-hmm. How do you think Apple's current sales have impacted their decision to take a stand on this? It's no secret that Apple is reporting a huge drop in Mac and iPad sales. iPhone sales also fell year over year for the first time in the company's history. Do you think in some ways this move to back privacy was really more about a business stand than a moral stand?
Well, I think Apple to some degree has been hoisted on its own petard because they have always sold their equipment to consumers as being more secure than the alternatives, specifically Android. And yet now we find out that maybe that's a little squishy. Okay, and so at some point you have to say, well, gee, if this is one of the advantages we've been peddling and it goes away in a very public fashion, will that have a business impact? And the answer is probably yes, although, frankly, if you look at, at the alternatives, I don't know that you really are saying that it's better on the other side of the pond.
Yeah, that's a good point. Well, security issue aside, when you look at Apple's outlook right now, you take everything in, how the sales are doing, some analysts have actually said that this marks the beginning of the end of Apple's rise. They're kind of taking an alarmist tone when looking at Apple. Is that fair? I mean, what do you see going forward?
Well, I certainly think it's fair, but I don't think it's because of the fact that the two terrorists in California used an iPhone. The reality is that Apple has always sold itself on the walled garden concept and that you are somehow safer and more secure as a result of it, and they charge a premium price. The market in the United States has become saturated. It's approaching that area in Europe. The idea that you're going to sell $600 or $700 or $800 cell phones to a billion Chinese is, I think, a fanciful idea. And oh, by the way, the government of China isn't going to put up with not being able to get into those devices either. So I think what we have here really is that you have a lot of companies that are essentially stretching the boundaries of credulity when it comes to this infinite forward growth view that they've all put out into Wall Street and which has buoyed their stock prices.
Well, Samsung, we should mention, is also reporting weak sales, of course, Samsung being Apple's competitor, on its smartphones in particular. So the question is, can we really place blame on each of these companies? Or is this more about the weak sales on smartphones? Is this more about the market really just being oversaturated?
Yeah, I think that's the truth. I think when you get down to it, what it is that people are looking at the cycle that they've been essentially forced into by the large vendors. You need to go buy yourself a new phone every 2 years. Oh, by the way, that'll be another $600. And you have some very cogent competition in the lower end of the market that does 90% of what the $600 phone does and costs $200. Well, there's some cannibalization going on there. And the same thing happened in the PC marketplace. It used to be that every couple of years you bought another one because the capabilities increased enough to be worth the investment. That is no longer true. So now if I have a 4-year-old laptop, I really don't get anything compelling by buying a new one, so I don't. And the same thing's happening in the cell phone business.
Yeah, and phones, I should mention, were in the spotlight at this year's World Mobile Congress, particularly as it relates to ad blockers, mobile ad blockers. Google and Yahoo had a very heated debate with ad blocking company Shine for what they say has destroyed the relationship between Google and Yahoo and its customers, advertising, et cetera. I mean, what do you think about what's going on right now? And do you think the tech giants have already lost the battle?
I think that the concept of shoving advertising onto a customer's device when they have to pay to have it delivered is theft. And that you have a carrier, a large carrier over in Europe that has now said, we're going to put a stop to this and allow customers to flip a switch and say, no more of that. We're not going to pay to deliver your advertising to our handset, is something that should have happened 15 years ago. The phone companies, the cell phone makers, that is Apple, Samsung, the Googleplex people with Android and et cetera, have for years locked the ability for you to put software on your handset that blocks ads. I have ad blocking software on my PC at the house. I'm prohibited from doing that with an Android handset because Google locks the particular files that I need to have access to do it. Apple has done the same thing with iOS. Apple kind of broke ranks in that they said you can now do this with the web browser, but not for applications. What needs to happen here is the people need to say, I bought the device, I'm paying for the data transport when I buy a cell phone data plan. You do not have the right to consume my data without my consent. And that means that I can say, this particular source of data I want to talk to, this particular source of data I do not. And that you have a carrier that's now stepping into this and saying, that's what we're going to do. I say it's about time.
Very interesting debate there. All right, time for a quick break, but stick around because when we return, we'll talk about how time will judge one of the greatest experiments of all time, that is historically low interest rates. Then in today's Big Deal, Ed Harrison and I are talking about the global markets. Gold is up, but is that really where you want to be investing, especially considering we're sort of in a deflationary environment here? The answer to that is on the other side. Stay with us. And as we go to a break, here are the closing numbers at the bell.
For decades, the American middle class has been railroaded by Washington politics. Big money corporate interest has drowned out a lot of voices. That's how it is in the news culture in this country now. That's where I come in. I'm Ed Schultz. I do the news on RT America. I'll make sure you don't get railroaded and you'll get the straight talk and the straight news. Question more.
Most people think to stand out in this business, you need to be the first one on top of the story or the person with the loudest voice or the biggest ratings. In truth, to stand out in the news business, you just need to ask the right questions and demand the right answers. Question more.
You're watching an RT America special report.
Man, it ain't about him. It's about you. It's about me. It's about everybody.
Basically, everything that you think you know about civil society had broken down.
There's always going to be somebody else one step ahead of the game.
We should not be in the business of normalizing violence.
We don't need people that think like this on our planet. This is an incredibly tense situation.
Welcome back to the show. The FIFA probe that's been underway for several months now has just begun to zero in on U.S. banks. Citigroup now says it received a subpoena from federal prosecutors over its possible involvement in a bribery scandal regarding World Soccer's governing body. This makes Citi the first large U.S. bank to admit it has been subpoenaed, though other banks, I should tell you, have been caught up in the mix as well. JP Morgan Chase and Bank of America specifically. Last May, the U.S. government brought corruption charges against current and former FIFA execs and called out multiple banks for transferring and receiving bribes and kickbacks worth about $150 million. Investigators are now requesting further information from Citi on those relationships as they seek to determine whether a blind eye was turned to suspicious transactions. The investigation in it of itself does not mean prosecutors will bring charges against Citigroup or any of the other banks under evaluation right now, but we'll continue to follow this story and, of course, bring you the updates. All right. Well, given the proliferation of negative rates and the renewed interest we're seeing in gold, we thought we'd show you some previously unreleased footage from our interview with best-selling author Jim Rickards. We asked him about the next stages of the currency wars thesis in the context of what he has described as a big science experiment of historically low interest rates. I first asked him if, looking back on his 40 years in the financial industry, whether he thinks this will turn out to be a successful experiment or a failed one. Here's what he had to say.
You know, I do use the word experiment, but it's not my word. It's former Chairman Bernanke's word. I had the opportunity to have a nice chat one-on-one with former Chairman Bernanke recently, and he used the word experiment. He said, this is an experiment. And the way he put it to me, he said, some future Ben Bernanke, meaning not Fed chairman but scholar, it's going to take 20 or 30 years before we know if this worked. Because Bernanke made his reputation as a scholar in the 80s and 90s looking at the Great Depression, which had happened, and the causes of the Great Depression, which had happened, 50 years earlier. And what he said to me was, some scholar 30 years from now is going to look back and figure out if it worked or not. And I didn't, I was polite, but I thought to myself, well, great, Mr. Chairman, we're the guinea pigs. You're the great. You got the lab coat on. This is all an experiment, but we don't even know if it worked or not. And interestingly, some research is coming out now that says QE is very ineffective. That's actually why I don't expect more plain vanilla QE, meaning just buying bonds from the banks and printing the money. That's QE2 and QE3. QE1 was fine. That was an emergency liquidity response to a liquidity crisis. That's what central banks are supposed to do. The QE2 and QE3, those were the real experiments. No one had any idea if they would work. It looks like they didn't work. At least that's what some of the research is saying. And Bernanke agrees with that. He said it'll be a long time before we really know. So welcome to the laboratory.
Oh, welcome to the Twilight Zone. Okay. Well, lastly, I want to ask you about gold, which recently hit a 6-year low, though gold prices are bouncing around. They're starting to edge higher. Should we expect gold to keep falling after a rate hike, or do you think we're seeing the bottom here?
Well, a number of very interesting things going on with gold. The basic analysis is that, people say gold's up, gold's down. What they really mean is the dollar price of gold is up or down. Well, the dollar price of gold, I think of gold as a currency or a form of money. So the dollar price of gold is just inverse to the dollar. So if you have a strong dollar, you're going to have a low dollar price of gold. And if you have a weak dollar, you're going to have a high dollar price of gold. So that's just a cross rate. Like, might as well be euro dollars or yuan dollars or yen dollars or whatever. It's just another cross rate. And go back and look at August 2011. That was the all-time high dollar price of gold, about $1,900. And that same month, literally within weeks, was the all-time low for the dollar in the Fed's broad trade-weighted index. So that was no coincidence. So I'm not surprised to see a low dollar price of gold when you have a strong dollar. I mean, everything's down. So oil, copper, steel, Australian dollars, Japanese yen, I mean, euro. Name something that's not down against the dollar. So to me, it's a little bit more of a dollar story than a gold story, number one. Number two, there's clear-cut evidence of manipulation. I talk about this in chapters 9 and 11 of my book, The Death of Money. You don't need to belabor that. But China is in a gold acquisition program, looking forward, not happily, but looking ahead, I should say, to the day when the system collapses and you need to reset it. And that's going to be like a poker game. You know, when you sit down at a poker game, you want a big pile of chips. Well, your chips are gold. So China's got to get their gold to GDP ratio up closer to where the United States is. So they've been buying gold by the thousands of tons. Now, if you were out to buy a couple thousand tons of gold, would you want a high price or a low price? Well, of course you'd want a low price because you're a buyer. So China and others are behind this manipulation. So you got the manipulation going on. But there's a third factor, which is right now, and it's a scary chart. I've seen a lot of bubble charts in my career, but if you look at the ratio of paper gold to physical gold, and there's always more paper gold, gold futures, gold options, unallocated gold forwards, gold ETFs. I mean, there's all kinds of what I call paper gold. And it should be larger than the physical. I mean, that's what any futures leverage trading system is all about. But that ratio of paper to physical is at an all-time high, and it has spiked significantly. And I'm starting to get reports from around the world, different correspondents, all credible, all seasoned, who are on the physical side of it, and they say you can't get gold, not in size. So it's, I think we may be heading for a train wreck there where someone's going to fail to deliver some physical that someone demands, and then that could set off a super spike. So you got it's the inverse of the dollar and deflationary vectors. That's keeping the price down. You've got Chinese and other manipulation keeping the price down, but there are these sort of tectonic forces at work that could cause a super spike sooner than later. It's a very unstable situation.
Big deal time. I'm sitting here with Ed Harrison. We're going to continue the conversation we were just having with Jim Rickards regarding investments in a weak global world. Rickards thinks the grand low rate science experiment that central banks are running will end badly, and he suggests we buy gold, specifically physical gold. So bracelets, jewelries, you know, girls can go to town there. But the question is, does gold really look good when we're supposed to be in a deflationary world? And Ed, I'll toss that question to you. What do you think?
Yeah, I mean, basically gold is supposed to be a hedge against bad things happening in terms of currency breakdowns or against inflation. And obviously if you have deflation, that's the opposite. But what we have now is what's called negative rates. Negative interest rates are essentially a tax on cash. They're saying that now you have cash and we're going to tax that cash. The advent of a tax on cash is now telling everyone, wait a minute, let's get into something else where the government can't take our money, and that's gold and other precious metals.
Yeah, so and with negative rates, talk of that on the table, it makes sense that gold would be ticking up further. But as of now, the Fed is still, as far as we understand, moving forward, moving to inch rates up, and that is according to our frequent guest, Tim Dewey, who says it could be March or quickly thereafter. So why would gold be rising in U.S. dollar terms then?
Yeah, so, well, one, of course, as I said, you know, there's the tax, and who knows when that tax could be applied in the United States. But the second thing that's more important is the fact that, in fact, the U.S. economy is actually decelerating, not accelerating. If you look at the numbers, especially on manufacturing, I think we have some charts on 3 different ones. Let's look at the Chicago numbers first. In Chicago, the business barometer, you can see at the end there, it's negative now in Chicago. If you look at the Dallas numbers, we have a chart of the different Dallas things. Every single thing within the Texas manufacturing, the sub-indices there, they're all negative, except for wage growth. And then finally, if you look at the composite PMI, which is usually, between Philadelphia and New York, what you see there, again, is negative. So manufacturing is going down. People see the real economy following manufacturing, that is the services sector following there. And so that means that people are saying that what the Fed's doing is going to be unwound over the longer term.
So it doesn't matter what the Fed is doing because we see what's going on here.
Exactly.
Yeah.
Exactly.
Okay. So the question is, how does an investor play into this?
I think what the investor takes a look at is the fact that risk assets aren't doing well. Let's first of all look at earnings, for instance. You know, there are 3 reasons that earnings are going down. This is the 4th quarter in a row that we've seen earnings go down. There's the fact that, number one, in terms of earnings, profit margins are mean reverting right now. A U.S. dollar obviously is a big part of this because the U.S. dollar has been strong. But, you know, on top of that, we have the fact that the real economy is slowing. So when you combine all those things together, that doesn't look good for equities. It doesn't look good for other real asset or other risk assets like junk bonds and so forth. So where do you go? You go to less risky assets, and the traditional less risky asset is government bonds, cash type equivalents, and then of course again precious metals, gold. That's where people are going because they're seeking a risk-off type of trade, and that's why gold's going up. Another reason.
Well, let's go back to the economy for just a second, because our neighbor to the north, Canada, is looking at 0.3% growth for the entirety of 2015. So that's painful to even hear. And people are talking about stimulus, but not only monetary, also fiscal. What can you tell us about that?
Yeah, so Justin Trudeau, that's why he won, is because he came in a platform of fiscal stimulus as well as monetary stimulus. I've heard that, maybe the Bank of Canada will actually lower interest rates, but we definitely know that there's going to be fiscal stimulus. The real question is what's going to happen as a result of that, and we just don't know. It's too early. It's early days now. Let's see what happens over time.
Okay, taking a look at Europe, and speaking of weakness, Europe's latest GDP numbers came out. They were very, very weak. The energy slump, of course, is taking its toll, sent the Eurozone into deflation. Do you expect the ECB to basically just go all out? I mean, to the extent that it can go to really fight deflation here?
Yeah, not just all out, but if you use a poker term, all in.
All in.
And,
all tools on deck.
Exactly. And, look at the core. Germany is decelerating. Finland's decelerating. A lot of talk has been about Europe actually having been one of the accelerating areas of the economy. Now they're decelerating as well. People are talking about Finland as the sick man of Europe. So the ECB will go all in. That's definitely going to happen.
Okay, and I have time for one more question, Ed. Sweden, let's talk about that, because that is one of the European economies with negative rates. They grew by 4.5% in 2015. Some people are talking about the economy overheating. What do you think?
Yeah, so let me use this as a context just to wrap it up in terms of the currency wars, because basically Sweden is trying to play a currency war, and they're going to get burned as a result of that. Their economy is overheating. This is the negative side of that. All that we're seeing in terms of monetary policy right now is going to play out in terms of currencies. It's not going to have as much of a real economy effect in Europe or in the United States. What we're going to see is beggar thy neighbor, and ultimately it's just going to be, trying to take from other people.
All right, let's leave it right there.
It's not going to work.
All right. We'll leave it right there, Ed, on those 3 words. Thanks so much. We love hearing from you guys. Tweet at all of us, Edward MH, Bianca Fascini, Amira David. Remember, you can see all the segments featured in today's show. YouTube, youtube.com/BoomBustRT. From all of us here at Boom Bust, we'll see you next time, guys.